Monday, June 8th, 2020, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about the importance of the 10-year yield to the U.S. stock market, to the world economy, to the whole financial system. And by the 10-year yield, of course, I mean the U.S. Treasury 10-year yield. I think the markets, the economy, the whole central banking monetary policy is between a rock and a hard place. It's going to be very hard for the central bankers to keep this game going. What's going to be the consequence of it? I don't know. But one thing I would say, they can't allow interest rates to rise too much, or else it will bring the whole thing down. Tomorrow, of course, we've got the FOMC meeting. It's a two-day meeting, Tuesday and Wednesday. We'll have a virtual press conference from Jay Powell. The Federal Reserve, or the FOMC, will come out with some of its projections or forecasts as well at this meeting. It will be very interesting to see what he says. I personally think the Federal Reserve might talk about doing what they did during World War II, which is control the yield curve or manipulate or not allow interest rates to rise through unlimited QE. I know they've announced unlimited QE, but they've slowed down the QE right now. I don't think they can do that. And I'll show you why they can't do that. We need to go back to the end of 2018 when Powell was going through with his policy of normalization of policy. He was trying to raise interest rates. I think we got to above 2% in the Fed funds rate. You can see here the 10-year yield at that time, end of 2018, got up to just about 3.25%. But as you can see, this was at the time when the stock market was under pressure, end of 2018. I remember very well talking about this towards the end of 2018. Even people like Goldman Sachs and other Wall Street banks were calling for another 3 rate hikes in 2019, more quantitative tightening, which meant unwinding the Fed's balance sheet. The Fed balance sheet, of course, got down to around 3.6 trillion in 2019, but they couldn't keep that going. They had to reverse everything. They started doing QE again back in September 2019. Even though they didn't call it QE, they had to inject hundreds of billions into the repurchase market on Wall Street, because overnight rates jumped to 10% in last September. So yeah, they can't let interest rates go too high. And I think what we saw this week is a sign of that. We saw the stock market, of course, rallying strongly last week. We've seen a good recovery since the bottom in March, but I think we are at a juncture where it's going to be very hard. It's going to be like the little Dutch boy trying to stop the water breaking the dike. He's trying to cover all the little holes, and he won't be able to do it unless, of course, they increase QE, unless they talk the interest rates lower, which is forward guidance. And you can see as well, because most people probably don't realize that when the stock market was collapsing towards the end of March, the 10-year yield actually had spiked massively. Yeah, we had gotten down to a low of 33 basis points back in beginning of March. We dropped massively, the 10-year yield then, but then we spiked all the way up to almost 1.3. So at the time of the stock market crash, the Fed had lost control of the bond market. People were even selling bonds Yeah, gold went down as well at that time, but you can see how important the 10-year yield is. And I think right now we are at a very key juncture too. You can see here that the 10-year yield actually got up to 96 basis points last Friday, almost 1%. Today is at around 91. So it's still, in my opinion, highly elevated for the system to handle it. And why is it so important? Well, because it's considered by investors as the risk-free rate of return, and every other financial asset is priced on the back of the 10-year yield. They do their present value calculations with the rate of interest from the 10-year yield. So it affects the stock market, it affects money markets, it affects corporate bond markets, it affects municipal bond markets, agency bond markets. So if this rate breaks through 1%, in my opinion, we could see havoc in the system again. And I think the Federal Reserve has a problem right now. And I know their balance sheet is almost, well, kind of doubled since September last year, from around 3.5 to now 7.2 trillion. But if you look at the chart of the balance sheet from the St. Louis Fed data, it's actually been the rate of growth has been slowing down. I think that's going to have to pick up again. And the stock market, I did a video towards the end of March where I actually called the bottom on March 23rd. I thought it was the bottom at the time, and I thought the market would rebound. I didn't think it was going to rebound as far as we have, but in terms of time, I said it could take around 13 weeks because I looked back at 1929 and extrapolated the cycle. And so the 13th week is next week. So I think the stock market rally is getting long in the tooth. I don't know where we could go still in terms of price on the upside. I tried to guess it in my video in March. I thought we could go to around 24,000 or just above 24,000, and we've gone a lot higher, of course. So let's quickly look at where the markets are then this morning. I saw last night before I went to bed, the futures open, and I think the Dow future was up as much as 250 points. After I look at the market, I want to talk about President Trump. The people who are very pro-Trump will probably like what I'm going to say. Does that mean I've changed my mind about politicians? No, but I have to give credit where it's due. I have to defend President Trump on this case because I think it's outrageous what people like the FT and all the other mainstream media outlets are saying about President Trump. But let's first look at the markets. It's 8:39 a.m. London. So as I said, the Dow was up as much as 250 points earlier. Right now, it's only up 28 points. I think it was even down before I started the video. We were at 27,112. Gold didn't start very well last night. We got down to 1677, but now it's at 1692. So it has rebounded. It has been as high as 1697. So we're up about $7 or 0.4%. Silver is up 15 cents or 7/8% at 17.58. So yeah, precious metals are fairly steady right now. I noticed as well that the currencies are still doing quite well. They were even stronger overnight. They've come off a little bit. We've got sterling or the British pound up 0.2% at 126.95. The euro is up 0.1% at 113.05. The dollar is unchanged against the yen, 109.56. We know where the 10-year yield is. It's around 0.91, and I think that's a problem for the markets. So crude oil is quite strong. We're up 1.4%. We're just above $40. Going back historically, the last 20 years, that 40 level is very important. It will be a strong resistance, I think, right now. There's been a lot of controversy in relation to President Trump threatening, he hasn't even done it, to send troops to quell riots. So the FT, I mean, they're an uber globalist publication. And am I saying President Trump isn't helping the globalists? I think he isn't helping one faction of the globalists. I think he's helping another. So that's why I'm not too sure about him. He even talks about getting the vaccines out. He talks about even getting 6G out there. So I'm not too convinced. He talks about having negative interest rates. Could that be some kind of contrarian play in that he allows Wall Street and the Fed to basically create their own destruction? I don't know. But all I know is that right now, these Fed policies of low rates and QE, the $6 trillion he signed into law, stimulus, it's helping the top 1% or top 10%, not the general public. Maybe he thinks he needs to keep the people at the top happy in order to help the people at the bottom. I don't know. But in this case here, look at this. Military chiefs fault Trump over protest response. President's threat to send troops to quell riots prompts rebuke from former generals and admirals. So they've got a picture of Colin Powell. The Americans call him Colin, not Colin, but it doesn't matter. He says we have a constitution and we have to follow that constitution, and the president has drifted away from it. So here's the guy who went in front of the UN Security Council, or the whole world, back in the day when he was Bush's, I think, Secretary of State. And he worked for Daddy Bush as well in the previous war in Iraq. And he told the whole world a big fat, starts with an L, that Iraq had a WMDs. So he's now saying that Trump is trampling on the Constitution, that he's threatening to send troops on the streets or the military to quell the riots. But I guess the FT is very biased and they don't look at the facts. But I've done my research and I've looked at the Insurrection Act of 1807. So what is the Insurrection Act? So it says the Insurrection Act of 1807 is a United States federal law. So it is constitutional. It empowers the President of the United States to deploy U.S. military and federalized National Guard troops within the United States in particular circumstances, such as to suppress civil disorder, insurrection, and rebellion. I think we can safely say we've had civil disorder in the United States in the last 10 days or so, maybe a little longer. The act provides the major exception of the Posse Comitatus Act of 1878, which limits the use of military personnel under federal command for law enforcement purposes within the United States. Before invoking the powers under the Act, 10 U.S.C. 254 requires the president to first publish a proclamation ordering the insurgents to disperse. So I looked at this last week and I saw that this act has been invoked several times since the act was passed in 1807. So who invoked this act? Thomas Jefferson did it. Andrew Jackson did it twice. Ulysses S. Grant did it 3 times. And it says here as well whether the state requested it or not. Most of the time, the state requested it. There's a few presidents who sent the troops without the state requesting it. So as you can see, it's been done several times. And it's interesting that in the last 60 years or so, we've had Democrats used or invoke this act a total of 7 times. So we had JFK invoked it 3 times, and he didn't even have a request from the states to send the troops. You can see he sent troops to Mississippi, Alabama twice. And then you had Lyndon Johnson, another Democrat. And I'm not trying to divide people. I'm just trying to point out to the propaganda, I think, that's going on by the mainstream media right now. Lyndon Johnson, so he did it 4 times. He sent troops to Michigan, even to Washington, D.C., Maryland, and Illinois. So the last president to invoke this Insurrection Act was George Herbert Walker Bush. He did it twice, sent it to the U.S. Virgin Islands. Yes, it's not a state, it's a territory, but he did. That was following the disorder in relation to Hurricane Hugo. And President Bush the first sent troops to California. There you go. 1992 Los Angeles riots. So, yeah, it's just crazy that they're having a go of President Trump just because he's threatened. He hasn't even sent the troops. And it's been done so many times over the course of history, right? And you probably won't see in the mainstream media, and I don't watch TV, as you probably know, they're never going to say that the Democrats did it 7 times, right? So there you go. That's what I wanted to talk about, President Trump. Keep an eye, of course, on the 10-year yield. If we get near 1%, I think it could be trouble for the whole system. They're gonna have to keep it below that level, in my opinion. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.